Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of GameStop, ticker symbol GME. And so here I am recording this on Sunday morning, October 20th, after GameStop closed at a price of 21.22, being down about 1% on Friday, October 18th. And so, yeah, I wanted to go over the chart here. And I have to say, I have been a little reluctant to do a video on GameStop the past couple weeks because I'm just going to throw it out there up front. My thesis is that GameStop is going to pull back to around $20 a share. And then from there, I think we're going to launch. And so, I'm just really, really excited about this. And I have to say, before recording this video, I did just listen to Hans Zimmer's No Time for Caution from the movie Interstellar. And I think that is about where we're at in the chart. I think that Matt Damon just screwed us over. And, I think that we need to, be docking right now. So come on, TARS. Let's pull into $20 a share and then launch from there. That's what I think is happening. And so, as you can tell, I'm just really excited about this because I didn't think 20 was going to be happening. But I think that we are going to be sweeping the lows here of $20.30, which we hit on October 9th. We did get rejected from my favorite level of $21.69, which is a historic 786 Fibonacci retracement level. We did hit the high of $21.75 on October 16th, but we closed at 2166, being just below 2169. I think that we are, unfortunately, going to be breaking below this uptrend because it's really not that significant. It only goes back to, let's see, the low of September 20th, which was at a price of 1948. The other pivot point being the low of $20.30 hit on the 9th. We did get a couple wicks to test that level, but really nothing significant. And I think right now what's happening is that retail thinks it's going to be breaking out, but we're getting rejected. And I think that, we need to be played with a little bit more. And I think that we're going to be sweeping these lows. I think that we need to lose a little more confidence before we really find that true bottom right around $20 a share before we launch. And so I'm just going to go over, all of the levels that I have up here. There are a lot of them. Really, there's just a number right around $20 a share. There is this purple uptrend, which would be right around $20 a share. We are trading below this orange uptrend and also Roaring Kitty's average of 23.41 as of his last posting, which I believe was like 4 months ago now. And so, I think we're getting a little antsy, but I think that if we see $20 a share, if we see 2030, I think that those are massive, massive dip buying opportunities before we see, the next big move up. And so, yeah, I'm just going to try to calm down a little bit before going over some of these things. I guess, before I do take too big of a step back, looking at the MACD here, did flip green the past few days, but, not with much momentum behind it. As we can see, there's not much volume, supporting the moves that we're seeing here, which are really not too much. So, I think that we might dip back to being slightly negative in the MACD or maybe just hovering around neutral before we see something big like this. But, I think, on the 20th, we saw a almost 12% move. I think we're talking, double digits, maybe triple digits types of moves in the coming months. Santa Claus rally, people shopping, people going to GameStop to buy gifts. I just think that there's a lot of great potential here, but I just don't think that the bottom is in yet. And so I'm really compelled by this purple line, which I'll go over in just a minute. But yeah, just taking a little bit of a step back so we can go over some of these levels here. I do have this high marked at 24.69 just because I like that number. The high from September 3rd was 24.69. We got a wick high above that, hitting a high of 25.02 on September 9th, and then we gap down. We have since filled that gap, but getting rejected from this orange uptrend. So good to be paying attention to that. We have been putting in higher lows. So overall, I think that this is really good. From the low here from the 11th of September. 1931 was the low there. Then we hit this low from the 20th of, let's see, 1948, so just a little bit higher there. Now we have this low of 2030, still higher lows. So, I think that we're going to be breaking this more recent low, but I don't think that we're going to be going lower than 1948. So, like I said, $20 a share, I think that's going to be a real discount if we do go down that low. The low over here from August 28 was 1988. From there, we did get a pretty big move up, going up. Let's see, what does that say? I don't really want to adjust this, but let's see, about 25%. So a very nice move there, but nothing too impressive from what we've seen in the past. But again, 1988 being right around $20 a share. So, I think that's just another reason why we might be going back to $20 a share. Just taking a further step back. So we've got this green retracement here. The 786 from that was at 1967, just 2 cents below my favorite number. And that's right around that's right around $20. So I think that we could be coming back to right around that level. And if we did pull back to 1967, that would still be putting in higher lows relative to the low that we saw on the 20th, which is again 1948, 1950. So I think that $20 seems like we could be going back there, and that could be a really, really nice discount before we see some big upside moves. And then looking at this, got the cursor over the purple trend line there. The second pivot low, the second pivot point from that was the low that we hit on August 5th when the markets gapped down. Lots of panic, but that was a great dip buying opportunity. That low was 1873, and that is a pivot point, for that purple trend line and also for that orange trend line. Both of those trend lines had that pivot point of the low of 1873. As you can see here, we did get rejected from that orange one. That is going to be resistance moving forward. But I think that this purple one is going to be very significant support in the future. Taking a further step back here. Let's see, don't want to do it too fast because, we get this violent price action to the upside. What we can see here is this purple uptrend. The other pivot point was the low of 1770 hit on May 24th before we saw, these big moves to the upside, getting up to $48 a share on June 6th. So, that was a pretty big move. We do have this gap up here at 48.75, just like we have a gap down here at 17.46, which I don't think we're going to fill. I don't think we're going all the way down to that gap. I think that if we do break below 20, I think maybe 18's the lowest we're going to go, because I think a lot of people are probably looking at that gap and saying, hey, 17.46, I'm not buying at 21.22, I'm not buying at 20, I'm going to wait for the great discount of 17.46, but then we don't hit that, and then they realize they made a mistake for waiting for that level when price is trading at 48.75. When this gap is filled, those people are going to FOMO in, recognizing that they were waiting too long, they were being too greedy for waiting for 17.46. Then they're going to FOMO in, and then when we get to 48.75, then it's really going to pick up momentum. So that's kind of my thesis there. But yeah, with this uptrend here, it does go back to prior to this big move we saw in June, getting up to $48. And, so we got those two pivot points there, and we did retest that. So this was September 20th, saw this gap down, fade to that trend line, then a bounce higher. And we've only tested that trend line following its formation once, right here. And so I think we could be testing it again before really launching and getting above this orange uptrend. And so if I take a big step back, we can see that orange uptrend goes back to the low that was hit on April 23rd, that being at a price of $10.01. And so we can see from that, we got kind of a little retest of that level here before launching up to 64.83 during market hours on May 14th. And then we did, let's see, pull back to that level, this pivot point here. We did break below it here, but only getting one close below a fake out break before going higher. And now we have been rejected from it, as I've mentioned multiple times, on September 30th when we hit a high of 23.64 and, got rejected from that level. And so, I think those are pretty important trend lines. I think that this gap is pretty important. 48.75 and that historic 786 that I have marked here at 21.69. That is based on the retracement from the low of 995 that was hit on April 16th, going up to that market hours high of 64.83 on May 14th. That level has been a very important one in my view, and I feel like it's a dip buying level. Whenever we've been below it, we've gone above it. And with price currently being above it now, with price currently being below it now, I think that it is, dip buying territory. But I think that we're going to sweep the lows because I think whether it's market makers, big money, smart money, whatever you want to call them, nefarious actors, I think that they're going to try to sweep people out. I think we're going to go lower than 2030. I think we're going to hit 20. I think we're going to retest this purple uptrend with all of these other levels that have been right around $20 a share. I think that is a very significant level. It's a psychological level. One $20 bill for a share of GameStop. I think we're going to be hitting that. And then I think that whether it's corresponding with upcoming events towards the end of the year or Santa Claus rally or maybe at the start of 2025, I think we're going to see some really, really violent price action. And I think that we're going to be getting past 48.75, filling that gap, maybe creating a new gap. And I think that we're going to be getting above 64.83. I believe it hit around 80 during the pre-market, or maybe it was after hours trading in May. And so, I think that we could be getting to the triple digits, but I think that we need to see just a little bit of a pullback. And with that being said, I think that might be, Matt Damon screwing us over before, I forget Matthew McConaughey's character's name, but before he and TARS, dock and, move into the interstellar space, launching to levels we have not seen before. I just think that we've got a lot of great stuff going on. The prior high following adjustments in, splits, the 4-for-1 over here from July 22nd of 2022, the high over here was $120.75. So I think we could be moving into, interstellar space, getting to above $120.75 in 2025, maybe not by the end of 2024. But I'm just really excited, as you can tell. I may not edit this video, so I apologize for any of my stutters or misspeakings. But I'm just excited. And I think that if we do see $20 a share, it is not time to panic. It is no time for caution. I think that is the gift of the year. $20 a share before we launch, following these moves that we've seen here. I'm just really excited about it, and I'm not trying to be bearish or anything with price being above $20. I would rather put out a video before we hit 20 saying I think that's going to be a discount than putting a video out after and saying I told you so. I'm really excited for $20 a share if it happens, but if not, we're below Roaring Kitty's average, and I think right there that says a lot. We are in deep effing value territory, and I think that we're going to be seeing triple digits in 2025, if not 2024. And so I'm just excited, and I'm just excited to be here with you guys. I hope you are too, but as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys. Have a nice rest of your weekend.